Good morning, everyone, and welcome to NYSE Live. I'm Kristen Schuller here in studio at the Stock Exchange. We do see equities mixed this morning as traders rotate into economically sensitive sectors. Small cap stocks benefited and gold returned to $5,000 an ounce. Well, hair rejuvenation biotech firm Veradermics is set to debut for trade here at the Stock Exchange today. It raised $256 million in an upsize IPO that priced above its marketed range. The New Haven, Connecticut-based firm sold over 15 million shares at $17 apiece, and its post-deal market cap is about just shy of $600 million. It's going to trade under the ticker symbol MANE, that's M-A-N-E. Let's take a look at what's on tap this hour in today's show. NYSE-listed Disney enters a new era, naming chairman of Disney Experiences Josh D'Amaro as its CEO, succeeding longtime executive Bob Iger. Iger is going to serve as senior advisor and Disney board member until he retires from Disney at the end of the year. We'll have plenty of coverage on this story throughout the day and the weeks to come. Meanwhile, over 3,000 attendees convened at the 28th annual ICR conference in Orlando, Florida last month and put the consumer in focus. Our Ashley Masternardi was on the ground, and she'll join me in studio to talk the biggest takeaways. Then at 9:30 a.m. Eastern, as always, we're going to head to the opening bell podium where NYSE-listed Citigroup will do the honors to celebrate Black History Month. Later this hour, Harold Butler, head of the Diverse Financial Institutions Group at Citi, will share more insights on the firm's initiatives. Well, the major indices are looking to open higher on the S&P 500 with fractional gains pre-market as investors navigate everything from private payrolls data to a slew of corporate results. And joining me now with more is Mark Newton. He's head of technical strategy at FundStrat. Mark, it's good to have you on the show this morning.
Thanks, Kristen. Great to be here.
How is the market looking to you?
Well, look, equities have held up in pretty resilient fashion, despite the fact that we've seen pretty rampant sector rotation since the beginning of the year. It hasn't been technology that's been working well, and it's really been energy, materials, even consumer staples. There are three reasons that I think investors really need to be prepared for potential volatility in the months ahead. And the first is that the recent deterioration we've seen in software very well could start to metastasize to other parts of technology, like semiconductors and even some of the storage stocks that have really gone sky high, the Western Digitals and the Seagates of the world. It's not unusual to see the areas that have seen real froth start to come back to life. We saw that in cryptocurrencies, it spread to precious metals lately, and now more recently software. So I think investors need to be prepared for that also to happen. The second reason is that, heading into the second year of a second term of a presidency historically has not been kind to the market. We saw that during Truman, Eisenhower, even more recently, Obama, Clinton, George W. Bush. So normally when you get to that second term, that midterm election year, you tend to see volatility. Mm-hmm. And, the third reason is a new change in Fed leadership is going to be really, really important. I think that historically the max drawdown has been about 17% when you look over Powell, Yellen, Bernanke, and Greenspan. And so Greenspan, of course, presided over the '87 market crash. So I think that, honestly, for the investment public that sort of parses over every word that we see from the Fed governor, to now have somebody like Warsh step in where we're not certain of what his communication style is, what his leadership is, what his message will be, what the path of the rate cuts will be. And my thinking is the markets are likely going to experience some volatility that coincides with previous times when a new Fed leader has stepped in.
So you laid out there how we could see the volatility play out. Mark, what does this mean? A pullback perhaps of 5%, 10%?
Yeah, I don't think it's imminent, but I do suspect that by the month of March, we are going to start to turn down, and that means probably 15 to 20%, and that really is between March and October of this year. So I don't sense we go into a bear market per se, at least by the media's definition, but I think that in general, we're going to need to reset and show some consolidation on many of these high flyer AI names where, many companies are still struggling to really realize profits on their investments in AI, and we're just not certain how that's going to materialize. So many of them have gotten very overbought. Mm-hmm. Technology still in a major longer-term bull market, I would argue, but after 2 straight years of 20% returns and then 17% last year, we likely need to reset that, and this is the year likely that it happens, coinciding with a lot of really prominent cycles that suggest that markets need to pull back.
Mm-hmm. And you've laid out some of those cycles. Any other ones our viewers should know about?
Well, the most important for the entire stock market's really the 41-month cycle. It lasts about 180 weeks by Edward Dewey. It's presided over the majority of the larger sell-offs over the last 100 years. And so it happened at the peak of the 2000, when we declined into 03 from 07 to 09. It peaked in 2021 down to 2023. So this is the year when likely we're going to see some consolidation, I think. We really want to be aware and probably properly diversify and not just put all our eggs in one basket into technology like many have gotten used to in recent years. There's plenty of areas within energy that are working quite well. Of course, Iran tension is part of that. Materials, commodities, emerging markets that look actually quite great. Looking at the LATAM space with what's happening in Brazil and Mexico and even areas like China that are gradually starting to rally again. So I think investors really need to consider stepping out of technology to some extent this year and letting it reset, and then it'll be time to buy again by the third quarter.
How does the economic data factor into this? We are not going to get that jobs report that we had anticipated for non-farm payrolls on Friday, but we did get the private sector read this morning on ADP. Did show job growth in the tens of thousands, but still shy of economists' estimates.
Yeah, this is honestly less about economic data. The job growth and really what you look at with regards to U.S. economic data has been far better than what we've seen in Europe. And so, GDP growth potentially could be 4.5% to 5.5% this year. Inflation is coming down. We're sort of in a Goldilocks period with regards to that. The real key is, does Warsh focus on inflation, what he said he's going to do, versus employment? We know that there have been layoffs, but yet the unemployment rate is still largely fairly low at 4.5%. It hasn't really started to skyrocket yet. And companies are holding, retaining people. They're not necessarily laying off in broad fashion. We've seen the quits rate, of course, be maintained at a fairly decent level. I'm not an economist by trade. I would just say that for me, looking at earnings and the economy, those likely aren't the reasons why stock markets are going to experience turbulence. It usually happens for other reasons. And so long-term interest rates starting to radically turn higher is something investors want to be paying attention to. The yield curve has been steepening in recent months. The dollar, of course, has plunged, which the administration argues they don't want, but yet that'll certainly help with regards to the deficit.
How does precious metal volatility factor into what you're watching when it comes to the charts?
It's just really one more area of something that has had a parabolic move that is now starting to come back to life. I sense that it's not going to be an investment as much as it will be a trade. My analysis in recent days suggested that metals can bounce, and I do expect that, but I don't think we get back to the highs, and I think we're probably going to see further volatility to the downside. The one concern about metals is that rates are starting to escalate on the long end. They still have a lot of great things going for them. We still have a real spending problem. We see deficits out of control. This normally is a great time for metals at a time when Warsh probably will stick to cutting twice this year. So Fed rate cuts are also a conducive environment for the metals. But we've seen a lot of volatility in a short period of time. I don't sense that that means that we immediately go back to highs. We probably are going to have much more of a choppy trading range where we rally over the next week or two. We pull back probably into March. We pull back to new lows, under monthly lows for gold and silver. That would probably be the time to consider buying them for the period of between summer into the fall for a potential move back to new highs then. So much more of a volatile trading range than what we're used to in recent years.
Mark Newton, head of technical strategy at Fundstrat, joining me in studio. Mark, thanks as always.
Thanks, Kristen.
Yeah, great to have you. All right, well, up next, Disney announced its new CEO earlier this week. We'll share those details, including a look back at a recent celebration that the NYSE was a part of at Disneyland in Anaheim, California. Here's a live look of the trading floor before we head to break.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. times. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live, everyone. The New York Stock Exchange congratulates a key member of its community this morning, and that's Disney. Yesterday, the media and entertainment giant announced Josh D'Amaro will succeed longtime CEO Bob Iger, effective on March 18th. Iger and D'Amaro rang the opening bell from Main Street, USA last year alongside NYSE President Lynn Martin on July 17th. It was to celebrate Disneyland's 70th anniversary from Anaheim, California. I was on the ground and spoke with Thomas Maslam. He's president of Disneyland Resort about the Disney magic this company is looking to spread both at the resort and around the world. Let's take a look.
I have to tell you, I'm truly humbled to be leading the Disneyland Resort through our 70th anniversary celebration. Because, you know, if you think about this is Walt Disney's original theme park. And so for me to sit where he sat, it's a remarkable privilege to be here now at the happiest place on earth.
It is impossible to be anything but happy. We saw the sunrise, of course, earlier to get the celebration started. It's been a rocking party. I know there's a lot more in store throughout the rest of the day. Talk to me more about the cultural impact and truly the phenomenon that this is.
Yeah, you know, Disneyland isn't just a theme park. Yeah, Kristen, it really was an original idea that became a global revolution, if you will, in theme park entertainment and in storytelling. And in doing so, we really inspired a huge shift in culture, in technology, in economics. Because, you know, Walt Disney wanted this to be a place, you know, where adults and children can enjoy it together. And here we are. 7 years later, millions and millions of people visiting Disneyland. And you know, what they tell us, what our guests tell us is that we truly offer something that is actually priceless. It's a chance to disconnect from the world and reconnect with each other.
Yeah, and you can see that here very much so. We, of course, had an incredible time at Disneyland during our trip, and our viewers have been seeing some of that as well. I know you referenced the economy earlier. The cultural impact is pristine. What is the impact that you've seen on economies?
Well, Christine, wherever there is a Disney theme park around the globe, whether that is right here in Southern California in Anaheim or in Orlando, Florida, or anywhere around the globe, wherever there is a Disney theme park, it has a truly dramatic and positive influence on the economy and the communities that we operate in. So right here, for instance, here in Southern California, if you think about this, the Disneyland Resort supports well over 100,000 jobs and creates over $16.1 billion of economic activity. but we also have a profound impact on our community through our Disney Volunteer Program, where we support a children's hospital, or through our support for the Make-A-Wish Foundation Grant Wishes. We love doing that, thousands of them.
Yeah, and we saw thousands of cast members here, of course, lined up behind you, your CEO, Bob Iger, our president at the New York Stock Exchange, Lynn Martin, to celebrate that opening bell. What was that moment like for you?
Of course, they all want to be here because they want to celebrate this truly historic moment, and of course, welcome our guests. But you know, Kristen, we are so proud of our cast members, and they love this place. All 36,000 that work here, they truly love this place. And you know, I'm so fortunate because in my role, I meet cast members every day, and truly, many of them have been here for decades, you know, and some of them may have started as a host in an attraction or in our restaurants. And you know, in staying with the company, they truly celebrated spectacular careers.
The bell was unique, and the story of Ward Kimball and the connection to that bell is incredible. How special was that?
It was very special. There's a story behind everything we do at the Walt Disney Company. And this bell is actually from Disney's Railroad Number 5, which, as you mentioned, honored one of our Disney legends, Walt Kimball, who was one of the original animators that really was responsible for creating Disney animatics.
It's absolutely amazing, and a new attraction to honor Walt, of course, on the 70th birthday.
Yes. Walt Disney, A Magical Life, premiering today right here at the Disneyland Resort. You know, it really is the story of Walt's life, which was quite remarkable, but it's also the most technologically advanced audio animatronic figure we have ever created. And I have to tell you, I personally feel it's a perfect tribute to Walt's dream of Disneyland and to his vision for what Disneyland would be and what it truly is today, a true source of joy and inspiration for the whole world.
Yeah, we feel that inspiration, that joy, and I have to tell you, it really is the happiest place on earth.
It is the happiest place.
That was a very happy place indeed. Thomas Maslin, president of Disneyland Resort, we thank him for that interview back in July. And the NYSE applauds Bob Iger, of course, for his service leading this company over the years. Josh DeMauro on his new role. And the NYSE recognizes Dana Walden, who's going to become Disney's president and chief creative officer. Let's take a look at a special message from the NYSE before we go to break.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Industry leaders, including those from the hospitality sector, gathered in Orlando, Florida at last month's ICR conference, and the focus was on the consumer. NYSE content creator Ashley Masternardi was on the ground and spoke with several C-suite executives, including Fogo de Chão's CEO Barry McGowan. Here's what he had to say about the firm's growth strategy.
It starts first with people pipeline. So we like to say at Fogo de Chão, we focus on scaling culture first. So really having visibility and readiness for our human capital pipeline, making sure they're ready, prepared to take on more. When that's ready, we find sites. So right now we have 3 years visibility to our talent globally, and we have 2 years of site pipeline. So we're a year ahead of what we need so that we're very confident if we're going to open a restaurant, we have the talent to do it. That scales the culture, brings the authenticity through, and gets the culinary art form right up front to the consumer to give them the experience they desire and all the value that they expect in experience.
Can you take me through a night at Fogo de Chão? What can a customer expect? What is the experience like?
Well, what's great is depends on the occasion. Like we have a bar Fogo experience. We have all day happy hour where you can sit and have grilled cheese. Amali got the honey at the bar. We have a $10 picanha burger because we butcher all day that we can make you a great burger. And all of our South American wine is half price. We just do that because we want you to experience something new than just, let's say, California wine or European. We're from South America, so we really celebrate those things. Our house caipirinha is decadent, distinctive, and very craveable. So that's one experience. And going to the full experience really starts and begins with the market table. Nutrient-dense food, superfoods from prickly pear to papaya to prosciutto to different cuts of cheese, everything that just complements your dietary form, but also gives you a way to customize and really go back frequently with so much more to enjoy. And then the dining experience begins with select cuts of meat. So we begin with a variety of 16 different cuts that you get to choose. Some people just have 2 or 3 cuts they like. Some people like to sample the full menu. Some people come in and just say, I'll have lamb today. But what we really love is in our menu, you can also indulge and have a Wagyu steak to share with your friends. So a tableside, grilled to perfection, carved tableside, put on the salt balk and shared for the table. So those experiences we do organically, and one of our new innovations is our butter-bathed lobster tail. So surf and turf available. We also do something distinctive with seafood. We have whole branzino that we blister. So we don't grill, we blister the seafood, which is really a beautiful way to dine. Really crisps the fish, it's fresh, it's whole, very light in flavor, and complements our churrasco beautifully. Now on the meat side, the way we cook it, slow roasting with just salt creates a salty bark. So I go back to it's distinctive, very craveable, and regardless of your diatribe, we have something for you.
You're making me very, very hungry, and you're describing the food beautifully. And something you touched on earlier is the meals really are protein-centric, and we have seen an explosion in protein, even at the conference. That is one of the main themes, is protein, protein, protein. Have you seen any growth since that protein craze has started in Fogo de Chão?
Well, it's great. You know, what we love is to say the trends are catching up with Fogo de Chão. We're 46 years old, but I'd say the trend started probably 8-9 years ago. Really, the younger generation, Gen Z and Gen X, we're already moving to protein. We see in our competitors when they run LTOs with beef, their sales go up. So we knew that. But what we love is today, and even you've seen the new food pyramid, correct? So the realization that protein is vital to your human genome across the board. Well, that pyramid that was just released, that's the Fogo food pyramid. So we're going to label it that because you look at it, it's protein first, then all the nutrient-dense leafy greens, the super greens, and the fruits, all that's what you serve at Fogo de Chão. So we like to say at Fogo de Chão, you know, if you care about your diet, you care about longevity and health, we've always served whole food and good for you food. It's just how you decide to dine and your occasion that we can accommodate your experience. So we're really excited. So protein, we're excited that people are discovering that this is paramount, and a lot of people bring up GLP-1. Again, the need for protein is high. So I think there's a lot of good things happening at one time that I believe we're going to continue to benefit from.
What is your hope for Fogo de Chão in 2026 in terms of growth, and how have you grown so far since you've been at the helm?
Sure. So for the last 13 years, we've kept a pretty steady growth algorithm of about 12 to 15% growth year over year. Pretty steady, growing organically with free cash flow, that's unit count and revenue. And I'd say this earnings doing the same. And so last year we finished opening 16 restaurants, which is a record year for us, including international. So we opened 12 in the US, 1 in Brazil, and 3 under international franchise. This year we'll do 16 to 18, including international. And we see steady state continued growth, traffic growth, and margin growth and expansion as we continue to focus on scaling our business very incrementally. So our story isn't anything more than just building on year over year, steady state growth. I would say the last 5 years, COVID period, we doubled our revenue, nearly doubled our EBITDA. This period of time, these 5 years through 29 and 30, we'll double our revenue and double our EBITDA again. So we feel very good about how we're growing, primarily because we have a human capital pipeline that's prepared to do it, and scaling our culture is first, and then the site pipeline we feel very good about, how we're doing. The new restaurants are opening really strong, opening stronger than our year 3 underwrite for those restaurants. So all the indicators are really strong for our brand. And I'll just say this, in Brazil, our brand awareness is 89%. In the US, it's about 42%. So as we scale with only 88 restaurants, we're coast to coast, our awareness keeps growing. And so one percentage of awareness is about 7 million of revenue to us. 1/10 of frequency is about 50 million. So as we build awareness, trial builds, and so does frequency. So all of our innovation, how we develop our sites and where we develop them, is all about building a brand globally.
All right, thanks again to Barry McGowan, Fogo de Chão's CEO. And joining me now in studio with more is Ashley Masternardi. Of course, she conducted that interview on site down there in Florida. Ashley, great to see you.
So great to be here, Kristen.
We've started rolling out some of these interviews. Great job in Orlando.
Thank you so much.
What were some of the major themes on display there?
I think, based on the interview we just heard, and something I realized with other people that I interviewed, is protein was a big topic at the conference. And, I think we've seen a protein craze in the past few years. We have protein popcorn, protein cookies, protein in everything. And these restaurants where meat really is, for lack of a better word, the main dish, they're seeing enormous growth. And also around that time of the conference, the government had just redone the food pyramid. They flipped it over, and they said protein should be, a main thing. And I think the consumer really does have an appetite for that. Another trend that we saw is this return to in real life experiences. A company like Wrench Group that provides in-home repairs is seeing enormous growth. Restaurants, fitness brands, just IRL, in real life, in-person experiences are seeing an uptick.
Yeah, any other takeaways for you? We'll have more interviews, of course, rolling out in the coming days.
We have a lot of interviews rolling out, but I think, what else? AI. AI was a topic of conversation. It's really been touching every industry. AI in restaurants, AI in exercise tech, AI in pet food, like AI in everything. So I think that was my major takeaway, is that AI is here to stay.
Amazing. All right, Ashley Masternardi with me in studio. Ashley, thanks so much.
Thanks, Kristen.
All right, everyone, in just a moment here, NYSE banking giant Citigroup is going to ring the opening bell. This big bank is on hand to honor Black History Month. As one of the largest financial institutions in the world that boasts more than 225,000 employees, serving clients in more than 180 markets. It has 12 inclusion networks made up of over 260 local chapters across 70 countries. That includes Black Heritage, which it says aims to help foster a culture of belonging at Citi. Well, doing the honors of ringing the opening bell this morning is CFO Mark Mason. And then later this hour, Citi's head of diverse financial institutions, Harold Butler, is going to join me in studio to talk about the initiatives that Citi is implementing to promote a winning culture. Here's a live look at that opening bell podium, a packed podium this morning for Citigroup, ticker symbol C, to ring the opening bell at the NYSE. And let's take a listen as markets open.
16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. We're off to the races here at the New York Stock Exchange. Stocks officially open for trade, and we do see a mixed market. We've seen some rotation into these economically sensitive sectors of late. Small caps and gold have benefited. Joining me now with more on the markets is Hank Smith. He's Director and Head of Investment Strategy at Haverford Trust. Hank, it's great to have you on the show this morning. And with markets at these levels, what's your take?
Yeah, so look, I think it's very constructive that the overall market is holding up pretty well, as we've had a fairly significant sell-off and a handful of the big tech mega cap names that have had very significant drawdowns, like Microsoft, for example. But what we're seeing is a broadening out, and that actually started to occur in the middle of the fourth quarter in 25. With healthcare stocks, and now it's broadened out to energy, materials, even some consumer staple and food stocks have done very well. So if you look at the equal weighted S&P 500, it is very much outperforming the market cap weighted S&P 500. And we think this is a healthy development because you just can't have the Mag 7 or the top 10, whatever you want to call it, drive a 500 stock index indefinitely. The laws of math don't work for that.
I'm glad you pointed that out, Hank. Just talking about the resiliency, the strength with the breadth of this market. I want to ask about volatility, though, because certainly the stock market has seen volatility in the precious metal space of late that has had an impact on equities. And I did have a guest join the show earlier saying that he does anticipate volatility throughout this year, even though that underlying foundation is there based on what you're saying. How do you anticipate volatility could factor in?
Well, I actually heard that interview, Kristen, and I agree with him that it would be very unusual to have 4 consecutive years of double-digit returns for the S&P 500. So we're probably due for a pullback of some kind. And also the second year of a 4-year presidential term is decidedly the weakest year. And here we are in the second year. But let's not forget, corrections are a normal part of any bull market. And they've got to be viewed constructively and very healthy for a bull market. They tend to flush out excesses and speculation, and we certainly have seen that in gold and silver as an example, which have become a momentum trade. There might have been 15 months ago some fundamental reasons to buy gold, but the last 5 or 6 months, it's really been an asset that has been going up, and that has attracted the momentum buyers. And I would be aware of any chart that has that kind of parabolic slope to it as gold and silver do.
We are going to get more big cap tech earnings throughout this week, and AI does remain in focus. Hank, how critical is AI spending to the stock reaction for these results?
Well, look, anytime you have an emerging technology such as AI today or 30 years ago, the internet, you are going to have some volatility in returns, even though the fundamental story is a pretty strong story. And we agree that we're in the early innings of this, everything to do with AI. We're certainly not in the latter part of the innings. But volatility in the stock prices is something to accept, and also will create a lot of buying opportunities in our opinion. And so some of the big pullbacks we've seen, I mentioned Microsoft a minute ago, we think is a buying opportunity. And one of the key differentials between today and, let's say, the late 1990s is you do not have valuations as a big headwind. I mean, Microsoft, NVIDIA, Meta, these sell at under 25 times next year's earnings. That is not a challenging valuation given the earnings power, the moat around their business, the cash generation, the exceptionally strong balance sheets. So maybe not in the next quarter, but ultimately for long-term investors, this creates an opportunity to either add to positions or initiate positions.
Hank Smith, Director and Head of Investment Strategy at Haverford Trust. Hank, thank you so much for joining us this morning.
Great to be with you.
Still to come, Citi is celebrating Black History Month here at the Stock Exchange. And in just a moment, the company's head of diverse financial institutions will join me to talk about Citi's initiatives for this month and 2026. Plus, today's American Dynamism event held here at the Exchange focused on investing in sectors that organizers say support the national interest, like aerospace, supply chain, and industrials. Stay with us on NYSE Live.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the Architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Moments ago, NYSE-listed Citigroup rang the opening bell to celebrate Black History Month. And joining me now with more is Harold Butler. He's head of Citi Ascent Capital. Harold, welcome.
Thank you very much. Thank you for having us. Thank you for hosting. It's always wonderful to be down here at the NYSE.
Great to have you here at the
Thank
Stock
you.
Exchange today. And of course, for this celebration, you've been on the Bell podium with Citi to celebrate Black History Month the past few years.
Yes.
Why is this important to you and Citi?
Well, it's a great question, and I think it sums it up. Not only is it the centennial celebration for Black History Month, but it's a celebration about what Citi's really all about, right? Which is diverse cultures. You know, we still remain the world's most global bank. We're represented. You know, I represent 12 inclusion groups with 40,000 employees, the world over, and so. You know, it's a very special time to celebrate and to, I think, in many ways, get regrounded into really what's important.
How will Citi be celebrating this month? What are some of the activities or moments in store?
Yeah, we've got a number of different activities all through the month. Many of them are, and it's not just, it's kind of all inclusion groups. We're very good about that at Citi, where inclusion groups of all sorts will get involved in helping to celebrate other inclusion groups, but different types of talks and leaders and speakers coming in. It's just got a whole host of things. And, you know, the business that I run at Citi, the Ascent Capital, we're celebrating a bit on our own, right? Because we're really focused on the work that we do that helps to support community banks under $25 billion in assets.
Interesting.
So it becomes an additional community push in helping to make sure that we empower communities to make home loans and to do things that are important to uplift and not discourage.
Talk to me more about that, the success cases that you have seen through this kind of empowerment.
Yeah, it's, you know, we began this journey about 7 years ago or so. And it was really focused initially on kind of doing what was right, doing what was good, it felt good. We've transitioned that over the last couple of years, hence the name Ascent Capital, to really focus on these banks, these community-based banks that do make first-time home buyer experiences come true, right, to make it such that individuals who ordinarily wouldn't be able to have access to credit do so through community-based banks. And so it's a lot more of capital markets activities, lending, and things like that that we do to help empower and support banks to do more. Mm-hmm. And we've done a little bit over $2.5 billion in activity in the last several years. Wow. I'd say that was pretty good.
Congratulations.
And we're still moving forward.
Congratulations. So I want to hear about how you've seen this really foster a sense of belonging and how that leads into your own goals for 2026.
Yeah, it's a great question. And, you know, I think perhaps there's probably no better example than one that I became aware of not long ago, where this young couple actually had applied for a very small loan to start a new business. Right, and they weren't having much success. And they went to their local community bank and they looked for an opportunity to get a loan to start their business. And it happens to be a bank that we support. And the bank reached out to us and said, hey, you know, can Citi help us through your talent and your resources to help educate these young couple on their business plans and do things to help make sure that they had a firm understanding of the journey they were embarking upon. Mm-hmm. And we did it, and they were successful, and they had, you know, they got themselves a loan, and they were able to do some incredible things, and they're off and starting. And I think that at the heart of it is really what it's all about. And that's really what we're very proud at Citi to be able to do in Ascent Capital, is to do what we can to empower the community to achieve, right? And for me personally, it's just a great pleasure to be able to do work like this, right? Because it's more than just feeling good. It creates a long-lasting legacy long after I'm gone. Don't plan on going anywhere anytime soon, but when I do go, hopefully this work will lead on.
Harold Butler, wonderful to have you here at the New York Stock Exchange. He's head of City Ascent Capital. Congratulations again.
Thank you very much. Thank you for your partnership for having us.
We're so happy to have you. All right, everyone, will stay with us because up next, today's American Dynamism event held here at the Exchange focused on investing in what organizers say support the national interest. We'll have more details as Ashley Masternardi prepares for that interview on the trading floor, as you're taking a live look of now on the other side of this short break.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of, and we've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly. It is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. Today's American Dynamism event held here at the Exchange focused on what organizers say supports the national interest. That includes sectors like aerospace, defense, the supply chain, and manufacturing. I want to send things down to the trading floor where Ashley Masternardi is standing by with more. Ashley, down to you.
Good morning, Kristen. U.S. national interest was on the menu at the New York Stock Exchange today as leaders from the venture capital firm Andreessen Horowitz and advanced manufacturer Hadrian met this morning over breakfast. Joining me now is Chris Power. He is the founder and CEO of Hadrian. Chris, welcome to the New York Stock Exchange.
Thank you. It's a pleasure to be here.
All right, so can you set the scene for this morning's breakfast? What was discussed?
How to best go about funding the mass-scale reindustrialization of America and the impact technology and AI can have on creating millions and millions of new American jobs as we reshore all the capability that we lost to China over the last couple of decades.
All right. What were some of the themes in the fireside chat? Anything else come out of that?
Yeah, I mean, huge amounts of how do you fund new companies? How does firms like Andreessen really help companies get to production scale? Where are the opportunities? I think we've seen a lot of the software companies, valuations go down on the New York Stock Exchange recently, and the kind of rise of really hard tech industrial companies like SpaceX, like Hadrian, like Anduril, that are growing super fast in the real world, charged by AI. So it was a super fascinating conversation.
Take me through what Hadrian does.
So we build America's most advanced automated factories that supercharge the American workforce so that we can reshore everything we lost to China and turbocharge defense production alongside our customers.
Who are you building for?
We build for the vast majority of the defense primes in the federal government, as well as in areas like space, defense, aerospace, and semiconductors.
All right, and you just cut the ribbon on a 290,000 square foot AI powered factory in Mesa, Arizona. You had announced that less than a year ago. How did it come to life so quickly?
Well, one thing is we've set up our Opus software platform that powers our factories. So it's mostly a copy-paste job. It's scaling what we already have. And also we have an incredible team that went from lease to production in 6 months in partnership with the city of Mesa to speed run a bunch of permits. But it was really just down to the team and our platform being able to go this fast. And I think it's one of the fastest factory build-outs in America's seen in the last 30 years.
What are some of the use cases for the AI in that facility?
So obviously workflow automation, but manufacturing is very, very deep tech. I mean, our job is to take the lost skills that America lost when we offshored manufacturing and put them in software to enable us to be 10 times more productive, but also make it far more accessible for new people to come into manufacturing and learn those skill sets. So like a lot of closed loop automation, a lot of task automation, and a lot of enablement to mean that, you know, a Hadrian worker is 10 times more productive than anybody else.
What's next for Hadrian?
A lot of scale. We'll be announcing another factory later this year, as well as making massive entries into the munitions production space, the submarine industrial base, drone production, and all these critical areas that are the Department of War is massively scaling up that just need the sort of factory automation that we can provide.
All right, Chris Power, CEO and founder of Hadrian, thank you so much for joining us at the New York Stock Exchange.
It's a real pleasure. Thank you for having me.
All right, we're now bringing in David Ulevich, general partner at Andreessen Horowitz, who oversees the firm's American Dynamism Fund. Welcome.
Hey.
All right, so what is American Dynamism?
American Dynamism is, well, the movement is the idea of investing in things that support the national interest. This is things like defense, energy, public safety, national security, logistics, education, transportation, anything that makes this a great place to build a company, be from, come to. That's American Dynamism, and our fund invests in companies across those categories, but largely defense, energy, public safety.
And you were part of a fireside chat with Chris from Hadrian this morning here at the New York Stock Exchange over breakfast. What were your main takeaways from that conversation?
Well, I think our conversation with Chris really focused on manufacturing, why it's a great time to be investing in manufacturing companies, being able to leverage automation, being able to leverage AI, and other things that really optimize and transform the way that we think of not just manufacturing the final output product, but the entire supply chain that goes with it. How do we think about rare earth minerals and mining? And so we had a great conversation about why we think these are great businesses, why they can be venture-backed businesses, why we think things that were, historically low margin, hard, low time to production kind of companies can now become high margin, fast time to production companies. And Chris is leading the way at Hadrian, and we have a whole portfolio of companies that sort of make an armada of great technology companies that are rethinking and reindustrializing America.
And I understand that other leaders in this space were in the room. Do you think there's power in having everybody in person in a room to talk about these things?
Yeah, I mean, you want to get the people that deploy capital, you want to get the builders, the people that start companies, and you want to get the people that cover all these things to really be informed and on a level playing field so that they can see why it's a great opportunity to invest in these companies. If we only invest in companies as startups, but they can't raise downstream capital, they can't raise the follow-on financings, it doesn't work for us. So we need the other capital allocators to be on board with this idea of American Dynamism. They need to see the opportunity that we see. They need to understand the profound impact that automation and AI is going to drive in these categories, and categories have never seen it before. So it's great, and the stock exchange played a great role in bringing us all together.
Can you break down what was talked about in terms of AI and what are some of the use cases?
I think people sometimes over-rotate on the concerns with AI, either the loss of jobs, but what they don't recognize is that there's a growing pie. When we focus on manufacturing, for instance, we're actually going to be creating more jobs and more opportunity, and AI is a part of driving that automation and creating the opportunity to actually bring manufacturing back here to the United States. So when we think of why we don't have great manufacturing in the US, there's a whole bunch of systemic reasons for that, but AI is actually part of what brings it back to the United States. Not just because it's a national security imperative, but because we can leverage automation, robotics, computer vision to transform the way we do things like manufacturing or defense production or defense technology innovation. And so I think people's overall the focus of AI here today was really much more positive and about creating opportunity and leveraging new technologies to make sure that we are the world's dominant superpower and that we do it in a way that uses lots of new skilled labor and uses lots of new capabilities that ultimately will create more jobs.
And what are some of the things that you look for in companies when looking to invest in them?
I think we're always founder first. We want to invest in the most iconic founders, the people that are building the companies that will matter most for tomorrow. If you have a great founder, there's lots of great ideas out there. We meet with lots of companies that tell us they want to reinvigorate manufacturing in the United States, but there's only one Chris Power, somebody who can both, I would say, magnetically attract talent and then magnetically attract capital. Those are the ingredients we care about. Those are the things we look for. And when there's a really, I would say, clear-eyed founder who's charismatic and can actually attract talent and attract capital, that's something that we're most focused on. There's lots of great ideas out there, but execution, hiring the best people, and then raising the amount of money you need to build these kinds of complex, capital-intensive companies is most important.
What is next for American dynamism?
What's next for American dynamism? Well, I think that the world continues to be spicy, and we see that there's no change in our country's focus in terms of wanting to rebuild the defense industrial base, reestablish space domain dominance. So there's categories that we see with tons of opportunity. People think SpaceX is going to be the only space company. I think there will be others. People look at Anduril and think it might be the only defense companies. We think there will be others. It's a great one. We're very happy to be investors in it. But there's lots of surface area that's being created and being expanded daily. And so we'll be investing in companies that often sit now at the intersection of defense, energy, space, logistics, supply chain, manufacturing. And I would say even in getting to know a lot of the companies we've invested in, we now can sort of shift left and look at all the supply chain needs for these companies: motors, actuators, the rare earth minerals, all the precursors that you need. There's a huge need for batteries in this country. There's a huge need for grid stability in this country, and that all creates lots of opportunities to invest in companies.
Thank you so much, David Ulevich, General Partner at Andreessen Horowitz, for joining us at the New York Stock Exchange.
Thank you.
Kristen, a lot of excitement from the floor all before 10 a.m. I'm going to send things back up to you.
You know it, about 50 people here for that American Dynamism event at the Stock Exchange today. It has been a big morning indeed. And a reminder to our viewers, you can catch us each weekday morning on all of the streaming services that you see on your screen right there. We'll have another show tomorrow. We'll see you at 9 a.m. Eastern on Thursday.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?